Thinking of exiting your business or taking on a private equity partner to help you grow faster? BizNexus has you covered. Tap into our network of thousands of best-fit investors, acquirers, and proven M&A advisors, and we'll help you begin the relationship confidentially on your terms, your timeline. Learn more at biznexus.com.
Disclaimer from the always present legal team. Podcast conversations don't necessarily reflect the views of BizNexus Incorporated. Everything you hear is informational news and updates from around the industry. We're not recommending any investments. We're not offering any investment advice. Be sure to do your own homework.
Welcome back, everybody. Today we're going deep on private debt and specifically what's happening in the lower middle market. You know, this whole area has been attracting a ton of attention, and we're going to unpack it all based on an article by Stephen Beauchamp over Brightside Partners called Why Less is More Part 2, Private Debt in the Lower Middle Market.
Yeah, it's a really interesting piece.
It is.
And it's especially relevant when you look at the numbers. You know, private debt overall has exploded. It's over $1.75 trillion now. And just in the first half of 2023 alone, almost $95 billion in new investments flowed in.
That's wild. So what's going on here? I mean, what's driving this massive shift away from traditional lending?
Well, there are a few things at play, I think. You've got banks pulling back, you've got regulations tightening, and of course, this whole backdrop of rising interest rates, it's kind of the perfect storm for private debt to take off.
So it's like traditional lenders are stepping back and private lenders are jumping in to fill the void.
Yeah, exactly.
And I know within private debt, direct lending is a big piece of this puzzle. So can you break that down for us a little bit? How is direct lending different from, say, high-yield bonds or syndicated loans?
Sure. So the key difference with direct lending is that you're dealing directly with the lender. These loans aren't traded on the open market like those other options, and they typically have floating rates tied to SOFR. That's the Secured Overnight Financing Rate. So the interest rates adjust with the market.
Interesting. So it's a bit more bespoke, right? More tailored and potentially more flexible.
Right.
Got it. Now, Beauchamp's article really zeroes in on the lower middle market as being especially attractive for this type of lending.
Yeah, that's right.
So what's so special about this particular segment?
Well, he lays out 4 key reasons, and they're pretty compelling. The first one, and this is the one that really jumped out at me, is the strength of covenants and protections in this market. It's not just about getting your money back. It's about having some real control over your investment.
Okay, control. Now, that's interesting. So tell me more about these covenants. How do they actually work?
Well, think of it this way. Imagine you're lending money to a friend to start a new business. You'd probably want regular updates on how things are going right. You'd want some insight into their progress.
Sure.
Covenants are kind of like that, but formalized. They're legally binding promises that the borrower makes to the lender. Things like providing regular financial reports, maintaining certain financial ratios, even stipulations on how they can use the funds.
So it's like having a seat at the table, not just passively waiting for returns, but actually having some say in how things are run.
Yeah, exactly. And this is where the lower middle market gets really interesting. Research from TPG Angelo Gordon, they're a major player in direct lending. They found that smaller deal sizes, which are typical in this market, they tend to have stronger covenants. So you, as the lender, have more control and protection.
Makes sense. Smaller deals, more scrutiny, tighter controls. Especially when you compare that to those big cov-lite loans you see in larger deals, where lenders have much less protection.
Exactly. So that's one of the big draws for lenders in this space.
Okay, so strong covenants, more control for lenders. That's reason number one.
Yeah.
What's the second reason Beauchamp highlights?
Well, even with strong covenants in place, sometimes things don't go as planned, right? Businesses can fail, but this is where the lower middle market really shines again. They have incredibly low default rates and high recovery rates.
Okay, now those are definitely numbers that any investor loves to hear. Are there any hard stats to back that up?
Yeah, there are. So the Proskauer Private Credit Default Index shows an overall default rate of just 1.41%.
Wow.
But in the lower middle market specifically, we're talking companies with under $25 million in EBITDA. That default rate plummets to just 0.7%.
That's tiny.
It is.
And what about recovery rates?
Recovery rates are impressive as well, even if a company does default. Research from S&P Ratings Direct shows that middle market loans historically recover about 85%. which is way higher than other types of debt.
85%. That's huge. It's not just about avoiding defaults. It's about minimizing losses if things do go south. So we got strong covenants, we got low defaults and high recoveries. What's the third reason Beauchamp points to?
Well, let's talk about yields. Remember those first lien senior secured loans we talked about earlier? With the current interest rate environment, those are yielding over 11% right now.
11%. That definitely gets my attention. That's significantly higher than a lot of traditional investments. Can you remind us what first lien means and why that's so important?
Sure. First lien basically means you're first in line to get paid back if things go wrong. You have priority over other creditors. So even in a worst case scenario, you're more likely to recover your investment.
Got it. So it's all about minimizing risk while maximizing potential returns.
Exactly. And these returns in the lower middle market, they're often coupled with low loan-to-value ratios, typically around 40%. So that further reduces risk. For comparison, the iShares iBoxx high-yield corporate bond ETF, that yields around 8.64%, but it carries a much higher risk profile.
So you're potentially getting a higher yield with less risk. That's a pretty attractive combination, especially for investors who are looking for alternatives to traditional fixed income.
Absolutely.
Makes sense. All right, so we've got strong covenants, we've got low defaults, high recoveries, and attractive yields. What's Beauchamp's fourth and final reason for why the lower middle market is so hot right now?
Well, the fourth reason is high selectivity.
Selectivity.
Yeah.
Tell me more about that. How does that play out in this market?
Imagine you're panning for gold. There's a lot of dirt to sift through, but you're looking for those valuable nuggets, right?
Right.
Well, it's kind of the same thing in the lower middle market. There are tons of companies out there, but it's about identifying the right ones, the ones with the most potential.
So it's not just about jumping on any deal that comes along. It's about being strategic and selective.
Exactly. And while deal-making has slowed down a bit recently because of rising rates, we are starting to see some signs of recovery and some pricing normalization. And this actually creates a great opportunity for smaller, specialized funds. They have the agility and focus to really capitalize on the best opportunities.
So it's a market that rewards expertise and a discerning eye.
Yeah, I think that's a great way to put it.
Fascinating stuff. So it sounds like there's a lot to like about the lower middle market.
There is. And those 4 reasons that Beauchamp plays out really highlight why this segment is getting so much attention.
Yeah, this is really eye-opening. We've gone beyond just a surface-level understanding of private debt and really dug into the nuances of this specific market.
It's a dynamic space, and I think we've only scratched the surface here.
Definitely. Before we move on, I'm curious to get your take on the current state of the lower middle market. Anything that stands out to you?
Well, what's interesting to me is that even with all the economic headwinds we've been seeing, this segment seems to be holding up pretty well. Beauchamp even points to some green shoots that suggest a potential resurgence is on the horizon.
Oh, that's encouraging. So even with rising rates and all the talk of a slowdown, there's still a sense of optimism in the lower middle market.
Yeah, I think so. And I think that speaks to the resilience of these smaller businesses. They're often more nimble. They can adapt to changing conditions faster than their larger counterparts.
Right. It's not like trying to turn a giant ship around.
Exactly.
They can be much more responsive to market shifts.
And that agility, I think, is really attracting investors.
Yeah.
Especially those who are looking for stability and steady growth, even in turbulent times.
It's like finding a safe harbor in a storm. Right? A place where you can weather the volatility and still see positive returns.
Yeah, I like that analogy.
And this is where I think Beauchamp's insights are so valuable. He's not just highlighting a market segment. He's presenting a different way of thinking about investing.
Yeah.
It's about shifting perspectives, looking beyond the traditional avenues, and exploring these niche areas where opportunity can really flourish.
Yeah.
And the beauty of the lower middle market is that it's often overlooked by those big institutional investors.
Right.
So it creates a unique playing field for those who are willing to do their homework and really dig in.
Yeah, it's like discovering a hidden gem.
A treasure trove of potential just waiting to be unlocked.
And it's accessible to a wider range of investors, too. It's not just for the big players.
Right. That's a key point. It democratizes access to these potentially lucrative opportunities. It's not just about having millions to invest. It's about having the knowledge and the willingness to explore.
Absolutely.
And that's why I think Beauchamp's article is so important. It's shedding light on a segment of the market that historically has been less transparent, less understood.
Yeah, he's kind of providing a roadmap.
Guiding investors toward this potentially rewarding path.
Exactly. He's not just telling you what to do, he's explaining why. And that empowers investors to make more informed decisions.
This has been incredibly eye-opening. I mean, we've really gone beyond the surface level here and explored the nuances of this fascinating market.
Yeah, it's been a great conversation, and I think we've only scratched the surface.
Definitely. But this conversation has definitely sparked my curiosity. I want to learn more about the specific players and strategies that are driving success in this market.
Me too.
So as we wrap up this deep dive, what final thoughts would you leave our listeners with? What should they be thinking about as they continue to explore the world of investing?
Well, what I find particularly intriguing is that this whole exploration of the lower middle market, it really challenges some of the traditional assumptions about investing. It's not always about chasing the biggest names or the highest headline yields.
Right. It's like shifting your focus from the spotlight to those performers working diligently behind the scenes. They may not be as flashy, but they can be just as talented, if not more so.
Exactly. It's about recognizing the value that can be found in these less hyped segments of the market.
And I think that resonates with a lot of investors, especially those who are looking for a more grounded, less speculative approach.
Absolutely. It's about building a portfolio that's resilient, not just riding the waves of hype and volatility.
This deep dive has certainly provided a lot to think about. We've explored the potential benefits of the lower middle market, from those strong covenants to the impressive default and recovery rates.
Yeah, and we've talked about the importance of selectivity, choosing wisely, not just jumping on any deal that comes along.
And of course, none of this would be possible without the insights of Stephen Beauchamp and his research. I mean, he really provided the framework for understanding this fascinating segment of the market.
His article is a great example of the power of research and analysis. He's not just presenting opinions, he's backing them up with data and evidence.
And that's what makes this deep dive so valuable. It's not just about listening to us chat. It's about providing our listeners with the knowledge and tools they need to make their own informed decisions.
Exactly. We're empowering them to be active participants in their financial journey, not just passive bystanders.
So as we wrap up, what would you say is the most important takeaway for our listeners who are intrigued by the lower middle market, but maybe hesitant to take the plunge?
I'd say the most important takeaway is to just keep learning. Don't be afraid to explore further, ask questions, seek out additional resources. There's a ton of information out there, and the more you learn, the better equipped you'll be to make informed decisions that align with your financial goals.
Knowledge is power, especially in the world of investing. And while this deep dive has provided a solid foundation, it's really just the beginning of the journey.
Exactly. Consider this a launch pad for your own explorations. Dig deeper into specific companies, research different fund managers, and don't hesitate to reach out to financial advisors who specialize in private debt.
It's all about building your knowledge base, your network, and your confidence. And who knows, you might just find that the lower middle market is your own personal gold mine waiting to be discovered.
Well said. I think that's a great note to end on.
It has been an enlightening conversation. A huge thank you to Stephen Beauchamp for his insightful research and for sharing his expertise with the world.
Absolutely. His work is a valuable resource for anyone looking into alternative investment opportunities.
And to our listeners, thank you for joining us on this journey of discovery. We hope you found it valuable and insightful.
Keep those minds curious, those portfolios diversified, and those financial goals within reach.
Until next time, happy investing.
Acquiring a business? BizNexus simplifies it. Access thousands of updated opportunities in our DIY marketplace or supercharge team sourcing with OmniSource, your all-in-one platform for on-market, off-market, and coming-soon deals. Scale smarter today. Learn more or book a demo at www.biznexus.com.